Now, if you're actually having a hassle trading gold, right here I'm going to be explaining a very simple strategy that you can use step by step to get entries in the market and exit in the market.
So at this point, what we're going to do is that we're going to go to the lower time frame, and the time frame we're going to be using right here is actually the 15 minutes time frame. Now, if you guys know me, I love trading the 1 hour time frame. Me and 1 hour time frame is just like this, but the pip difference is actually very different from currency pairs. So that's why I'm going to be sticking with the 15 minutes time frame on this one. Now, whenever I want to create a strategy, there are actually 3 things that should get to our head. Number 1 is this strategy should be able to give us entries in the market. This strategy should be able to give us exits in the market. Now, in order for these 2 things to be possible, there are 3 things we need to understand in the market, which is the market moves in an uptrend, the market moves in a downtrend, and the market actually moves in a consolidation. Now, how can we be able to find those trends in the market? It's through like support and resistance and how the market is moving. So we need this to show us points of uptrend, downtrend, and consolidations. So this is exactly what we want to know in the market. Now, one thing about the trend is that it actually moves in this format, which is it has a push phase retracement, push phase retracement. You could see that it's actually like a staircase format. Now, why is this actually happening like that? Because of support and resistance in the market. Now, we need to actually get something that will show us when the market is going up, when the market is going down, and when the market is actually going into consolidation. Now, as you can see right here, this is actually a downtrend and this is an uptrend. Now, as we found this out, this is basically price action. We're using how price is reacting to actually find those points of downtrend and uptrend. Now, when we're talking about trends, the best indicator for it is actually the moving average. So the question now becomes, what moving average are we using? Before that, let's just go into the indicator section right here and type in the moving average. Now, if you remember what I said, the moving average is actually very good at identifying trends in the market, and not just identifying trends in the market, it also shows you when the trend is actually changing. Now, for those that don't know anything about the moving average, whenever I see price below the moving averages, it's trying to indicate a sell, and whenever I see a price above the moving average, it's trying to indicate a buy. Let's use this information we actually have right here. So as you can see right here, price is below the moving average. We know that there's a sell. Price above the moving average, it means the market is actually in an uptrend. Now, in case you don't know, the moving average is not actually very good in terms of consolidation in the market. So whenever there's a consolidation, you find out that the moving average is going to be at the middle of price. Now, as you can see right here, there's actually a consolidation. So the moving average was moving in between, price actually went on a downtrend, and we could see that clear information. And if you look to this point right here, the moving average is giving us that clear information, clear information. Now, in case you don't know about these moving averages, whether you see 9 moving average, 20 moving average, 25 moving average, now 9 SME actually mean 9 candlestick calculated to which this line is being drawn. So what it does is that it actually calculates about 9 candlesticks on the chart and draws that line. Now, since we've already gotten like a very close-up look at the market, we need something a bit broad. In order for us to get something a little bit broad, what we can do right here is that we can come to the indicator section right here, still the same thing again. Go to the moving averages, and once you already have the moving average, it comes default as 9. I think I need to delete some drawings here. So it actually comes default in as 9. So what you want to do right here is that you want to come to the settings. Let's go to this part that says length. So we're going to change something right here. We want to have like a very broad view of the market. So we change this from 9 to 25. Now, once we've already put in like 25, what this does is that it calculates 25 candlesticks and draw this line. One is giving us close view of the market, and one is giving us broad view of the market. So what we have to do is that we have to differentiate these 2 things. This 9 moving average, what we can do is that we want to add in some separations right here, and go to the style, kind of increase this one a little bit so I can have a little bit of depth. Then we're going to go to the 25 SME to give it like a little bit of difference. We're going to change this one to be red. We're going to increase the thickness. Now, let me give you guys this trick. Now, the work of the 9 moving average is to show that the market is still intact with the trend. And the work of the 25 moving average, which is the red one as you can see here, is to show us that price is still in that buy formation, or the market is actually in that sell formation. Now, whenever we see price above the 25 moving average, it's trying to indicate that the market is actually in a buy state, which means we need to be looking for more of buys in the market. And whenever we see price below the 25 moving average, it's trying to indicate that the market is actually in a sell state, in which we're going to be looking for sell points a lot in the market. So it's what you have to note. Now the work of the 9 moving average is just to show us that price is still intact with the trend. Let me show you guys exactly what I mean. Now the work of the 9 moving average is to show us that price is still intact with the trend. This means price is actually following the trend carefully. Price is following the trend optimally. Now whenever we see price break below the 9 moving average, it does not mean that price is changing into a sell or whatever. This actually represents retracements in the market. So you see that price went below the 9 moving average and just right at the 25. So what it did there is that it came to retest that point in the market. So once it retested, the 25 moving average told us that okay, the trend is still an uptrend. So we could see the 25 moving average acting as a point of support and pushing price up to continue with the trend.
Now there's nothing like placing a trade on gold and being rest assured that everything will go well. Now with my broker and today's sponsor Vantage Market, there's nothing to worry about. Now Vantage is a regulated broker that, due to their awesome services, have been able to win not just one but 3 global forex awards in this year alone. Now Vantage FX is regulated by the Financial Conduct Authority, Australian Securities Investment Commission, and other regulatory bodies depending on the location. That's why you're going to get fast withdrawals and deposit with Vantage FX. Now I've been using Vantage Market for over a year now, and I must say I've never had any issues pertaining deposits or withdrawals. Aside that, they also give you razor sharp spreads with over 1,000 financial instruments you can trade, like forex pairs, commodities, indices, and stocks, and yeah, also cryptocurrencies. And yeah, this also means that whenever the forex market is closed on Saturdays and Sundays, you can trade the cryptocurrency market during the weekends with Vantage Market. Now they made all these things very easy to manage at the tip of your finger with their mobile app, which is available on both the Google Play Store and the Apple App Store. Now I'm not joking when I say this app is packed with a lot of features, from you being able to place and manage your trades to getting free trading tips and also current related news in the market. Now if you want to enjoy all of these things I just mentioned, you can go ahead and click the link in the description of this video and start trading with Vantage Market.
Now we've already figured out how we can get buys and sells in the market, but how are we going to be able to figure out consolidation in the market? Now in order for us to figure out consolidation in the market, we need to have 2 things in mind. We need to have true confirmation of support and resistance in the market. Now in terms of support and resistance, there are actually 2 types of support and resistance. There's static support and resistance, and there's dynamic support and resistance. The moving average can obviously act as a dynamic support and resistance because it moves along with the market, but static support and resistance is that point where the market just stays at. So I'm going to be showing you guys how you can get that. But now I'm going to show you guys 2 ways that you can actually find support and resistance. I'm going to show you guys the manual way, and I'm going to show you guys a very good way that you can actually find it. Now the normal way is just finding the place where price reacts, and once you just draw that point, if you try to drag that point again, you see that price is actually reacting to that point in the market in an extended form. So just this line right here, you can see is acting, this point is actually acting as a point of resistance, point of resistance, point of resistance, point of resistance. And if you still go ahead to drag this through, you can see that price is actually still reacting to those zones in the market. Like now this is just like the normal way of doing this, but let me show you guys a much more better way you can actually find support and resistance. Now in order for you to do this, you have to go to your indicator section, and I'm sorry, this is only available on TradingView. Now in order for you to get this, what you have to type in is swing ARM HR chain indicator. As you can see right, this one right here, this is actually the indicator by VSNFND. Just you want to make sure it's actually this one you're actually getting in. Now once you already have this on the chart, it's looking a little bit messed up. What you have to do is that you need to correct some things, and I'm sure you guys want to pay attention. So what you want to do right here is that you want to go to the indicator section, backtest flag, go to the settings, and what you have to do is that you have to start unticking a lot of things right here. You can untick trailing stop, can untick extorium, untick fib 1, fib 2, fib 3, L100, LS1, LS2, LS3, SS1, SS2, SS3. There's still some other things we need to do right here. We have to leave the plot background. We can remove the label on price and value in status line. Now what you want to do right here is that you want to change this 28 to 5. And another thing we're going to do right here is that we're going to change this ATR factor to 6 and hit OK. So this is how the chart will actually appear. Now the work of this ATR trend indicator is to show us those points of support and resistance in the market. So whenever there is like an uptrend, the cloud of the ATR trend indicator is actually blue, and whenever there is a downtrend, the cloud of the ATR trend indicator is red. If you could look clearly at the colors, you can see that they actually increase intensity as it goes up. Now as you can see from this point, this actually represents a resistance in the market, and this actually represents a thicker resistance in the market. Now let's see how the ATR trend indicator actually works on the chart. Now if you could see from this point right here, you could notice one thing, that the ATR trend indicator has already told us this is actually a point of key level in the market. We obviously need to respect those zones. Let's go into another point in the market. If we still look again, we can obviously see the same thing. Price reacting to the ATR trend indicator and reacting off of it. Price reacting to the ATR trend indicator and reacting off of it. The ATR trend indicator actually gives us valid points of key level in the market. This is to show that the ATR trend indicator actually gives us valid points of support and resistance in the market.